Hi there, everyone. In this week's chat with Ralph, my mate and ex colleague in the city, we're going to talk about three topics. So, firstly, we are going to talk about inflation. Secondly, we're going to talk about Bitcoin and why it's going to go up. And thirdly, we will be talking about how fusion will change the balance of the world. So, we're getting philosophical on your. Actually, I can't say that word, can I? But anyway, we're all going to get a bit philosophical about that because that could be quite incredible. But anyway, so let's start off with a bit of talk about inflation. Obviously, it's something that we talk about a lot on this particular podcast, and it looks like I mean, although inflation is still going up. The rate it is going up at seems to be slowing down. Um, but what are your thoughts on inflation at the moment, Ralph?
Yeah, we were just talking about it again because uh, all eyes are on inflation basically. And
Hmm.
if you look at the sort of traditional economist data watching,
Yep.
this is always happening. I mean, the economists are always looking at all the data and all the various metrics, and there's, of course, inflation is part of it. Inflation, interest rates, jobless figures, price of strawberries at Wimbledon, all this type of stuff is being looked at, and then people are trying to find out what that might actually mean in
Yeah.
terms of their projections, etc. We know this. This is nothing new, but
Hmm.
I think currently this one metric, inflation, is all important, and people are looking at inflation more than at anything else. And the
Yeah.
reason I think is we're living in times where everything seems to hang off inflation.
Yeah.
I mean, if you think about it, and then this is, by the way, also why I think that the markets reacted negatively to the news that inflation had not fallen to levels expected.
Hmm.
Inflation had still fallen, which is positive,
Yep.
but it hasn't fallen to the expected levels, and therefore it hadn't fallen quickly enough.
Yeah.
And I think the thought process then is this: there's a whole chain of events which hangs on that, and it's basically okay, inflation hasn't fallen to levels which we were expecting, it isn't falling quickly enough.
Mm.
That means inflation is going to be stickier than we thought, and therefore interest rates are not going to fall as quickly as we think.
Hmm.
Indeed, interest rates are going to be stickier at the current level, or indeed have to be increased. That last bit is what the markets were immediately expecting and pricing in.
Hmm.
So it's not just that inflation is falling and, ooh, that's good news, but not quite as good as we thought. The idea was inflation is falling, but not as quickly. Therefore, interest rates. So this is basically how the markets think. These intermittent steps are not really felt. Inflation isn't falling quickly enough. Therefore, interest rates are going to be increased again.
Mm. Hmm.
If interest rates are going to be increased, it means that mortgage costs are going to be increased, which
Hmm.
means that people are going to have a squeeze on discretionary income, which means they can't spend enough in the economy. And although this is what we kind of want because we want to fight inflation, at the same time, it means that growth is not going to be forthcoming
Mm.
in the economy. So that's another metric then, which is almost like a domino, is kind of falling. The growth expectations of the economy will have to be adjusted downwards.
Mm.
And that's one thing. The other thing is we have recently seen a banking crisis. It has gone away, but it has not really gone away. It's sort of smoldering in the background. And we know that the banking crisis will eventually abate um, consistently uh, when interest rates are coming down,
Mm.
because interest rates increasing is in fact the issue. And
Mm.
so again, therefore, you have that particular conclusion. Oh, interest rates will have to be increased. That means the pressure on banking is not going to come off. That means we're going to have that particular risk smoldering on in the background, which is also going to be negative.
Mm.
And that, I think, all of this reasoning happens instantaneously in the minds of observers in the city of London, on Wall Street, in other stock exchanges around the world. And that is, I think, why we are getting we're getting share price reactions to inflation news,
mm,
which may seem disproportionate to
mm,
the actual event. But they would only be disproportionate, or they would have been disproportionate like 10 years ago when we were in
mm,
a different
mm,
situation, but now they're not.
mm.
That's kind of what I'm thinking. It's
Yeah.
almost like inflation is punching above its own weight
Yeah, yeah.
slightly.
I mean, this goes back to what we were saying. I think we were saying last time, which is basically that. Um, so the UK inflation rates came down. It just didn't come down by quite as much as the Bank of England had expected. And there was an immediate reaction by mortgage lenders who whacked up their immediately whacked up their mortgage rates, um, and and then it looks like that has come at the same time, or is impacting the house prices, which have, we've just seen figures that show that their house prices have come down at kind of a record rate. And it just, I mean, for me, I mean, well, this where we're getting at it, I guess, is that I wondered, I thought that it looked to me like the market was overreacting because it looks like we are seeing a replay of what happened with mortgage rates in the aftermath of the disastrous Truss Kwarteng mini budget announcement. So they announced it, and immediately afterwards, loads of mortgage products were pulled. Mortgage rates were whacked up, and that had a big effect on the real estate market at the time. Now,
Yes.
I obviously that was a disaster, and it was destabilizing. However, I kind of, and I was thinking, well, why is it? It just seems like we're almost seeing a replay of that this time round, except actually the circumstances aren't quite as bad. But then it seems, from what you're saying, that everyone has become so hypersensitive to anything to do with inflation that there's like almost instant panic, and almost like a overreaction going on. But
Yeah,
it
exactly.
yeah, I mean, it is interesting because you know I guess the thing is most people will find talk about inflation pretty boring, normally. But the problem is that we are all affected so much by it, and how it moves. And the Bank of England is so transfixed by it, and to bring it under control, that is also having kind of knock-on effects, essentially. So yeah,
Yeah, yeah, exactly. You referenced Truss, Kwarteng. Now, what happened there was, of course, like that was basically a shock to the system, a
yeah,
shock to the economy, because they
yeah,
basically were reducing taxes and
hmm
were basically saying this is all going to be fantastic. And if you don't do that, then you're a member of the anti-growth coalition, if you remember
hmm
that. And yeah, the issue therefore was that markets were expecting, and markets generally, markets in the UK, but also international investors were expecting inflation to spiral.
mm,
And in response to that, we saw the adverse market reactions, etc. And so, in essence, this dynamic is exactly the same.
mm,
Investors are expecting inflation to be sticky. Now, that
mm,
doesn't mean spiral, but it's of course the same kind of dynamic. And so, therefore, you're right to link it or reference the Kwarteng Trust disaster, but that's almost an example of what happened. It's almost like an illustrative
mm,
example of for you to understand what happens if you get a shock to the system. Then
yeah,
uh, then people are expecting inflation to spike, and then everything follows.
mm,
And it's not going to be as bad as that, but obviously anything which will reduce the rate at which inflation is expected to fall,
Mm.
is going to have adverse outcome, adverse impacts to
Mm.
people's expectations and projections, etc.
Yeah.
And then, of course, it's always lumpy, isn't it? I mean, sometimes inflation falls because of an isolated event. Sometimes it goes up because of an isolated event. We had the tomato scare where nobody could afford tomatoes anymore, could actually buy tomatoes. I remember selling them on eBay for, for massive
Did you
profit.
get a good rating as a
Yeah,
tomato seller?
yeah, absolutely. And I got
I I
five
I
tomatoes
I
for.
rate Ralph's tomatoes 8 out of 10. Fantastic delivery, but could have been juicier or something.
Yeah, yeah, exactly.
Nice. Yeah.
The
So
rating I got on Rotten Tomatoes was
yeah.
also that guy, right? Yeah, okay.
Yeah.
Really rich.
Yeah.
Okay,
Yeah.
cool.
Yeah.
Anyway, we probably can move on. I don't know
Yeah,
whether
that's
that's.
fair enough. Fair enough. Yeah, absolutely. So anyway, tomatoes. No, anyway, no.
Yeah,
So the second thing, really, we thought it would be interesting to talk about today, is I just saw this really interesting article. It was in the Lex column in the FT, and it was talking about like a technical reason why Bitcoin could go up. Now, um, so far this year, it's up 67%. And there is an event that happens once every 4 years. And no, it's not the Olympics. And no, it's not the World Cup. This is something else that also happens every 4 years. Why is it 4 years? Anyway, it's called the halving. I mean, this has got nothing to do with Lord of the Rings or anything like that. This is this.
it sounds like it,
It
but
does sound
anyway,
like it,
yeah,
doesn't it? Yeah.
totally.
Anyway, so there is something called the halving that happens every 4 years, and it means that the rewards for Bitcoin mining are halved. So yeah, you see what I did there. But anyway, I
Well,
think
that's what it is,
it
though.
would be a great idea for you to explain this and why, you know, how it will work, because I think you gave a brilliant explanation when we had a chat earlier on. So if you'd like to take it away, please, Ralph.
It's one of these nerd events.
Yeah,
It gives me a chance to nerd out in public. I love it.
nice, nice.
So I hope I get it right. I'm not the greatest expert on this, of course, but basically, God, this is so nerdy, unbelievable. Basically, what happens? Bitcoin have said in their original coding that there is going to be a lifetime cap on the number of bitcoins that are going to be released.
Hmm.
And that number is 21 million. So 21 million bitcoins are going to be released over the lifetime of the blockchain, and that is it. We therefore have a finite supply of Bitcoin. Currently, what's in circulation is something like 19 million, and so we're not very far away from the event where we have issued Bitcoin to capacity. The way this works is that the chief event through which Bitcoins are created is Bitcoin mining. When Bitcoin was created, I think in 2009, a Bitcoin mining operation received 50, that's 50 Bitcoins for the proof of work. And I mean, we discussed that before. We talked about proof of work before. I mean, no prizes for guessing. Nobody listened because it's another super nerdy, boring thing. It's worse than inflation and mortgages.
I tell you, you are selling this so well,
Yeah,
so well. Yeah,
excellent.
I mean, I think
That's
people will be frothing at the mouth at the moment. So yeah,
absolutely. So I'll just make it quick. That's the thing where that's the thing where you have people. Well, what you read in the press is always you have a mathematical equation to solve, and it's a very difficult equation. That's not actually true. There's no mathematics involved in this at all. It's basically the code, and the code is there are trillions of possibilities for the code, and you have to hit a particular code. And not to be overly technical in this, you can't actually have an analytical shortcut. The computer has to, you type something into the keyboard, so to speak. It generates a code. You take a look whether it is the code which the Bitcoin provider has said you need to get. And that's how it works. Type it in, take a look, it's not the code. Type it in, take a look, it's not the code. And that is how you do it, one by one by one. Obviously, you don't do this as a person. You have computers which are configured to do just that, just one thing, and that is to go through all possible permutations of the code very, very quickly. Obviously, they do tens of thousands of these per second, and finally they will hit the code. When they hit the code, that is then published on the block, and that is known as proof of work, because you've done the work.
Mm-hmm.
When you hit the code and publish proof of work, you are awarded the Bitcoin award for it. And that Bitcoin award used to be 50 Bitcoins when it was first launched in 2009. And since then, this is now the halving. I find this word very amusing. This is now the halving. So since then, every 4 years, I don't know why it's 4 years. That's just been chosen in the original coding of the software. Every 4 years, that particular Bitcoin award, well, is divided by 2. So in 2013, it would have been 25 Bitcoins, etc. We are currently at 6.25, I believe, and that is going to halve again to 3.13, I think next year. Now we're going to do some mathematics. This is going to be cool. Everybody's switching off. Fantastic.
What are you talking about? I tell you what, I like this. I'm right on the edge of my seat. So yeah.
So basically, it works like this. The Bitcoin award, historically, in 2009, you were awarded 50 Bitcoins for a block of 210,000. So remember, 21 million is the overall lifetime capacity cap. There are not going to be more than 21 million Bitcoins in circulation. You were awarded 50 Bitcoins for a block of 210,000. This halves every 4 years. Every 4 years. Now let's do the math. So I'm going to write it into the air. So you got 50, which we factor out. 50 times 1 plus 1/2 plus 1/2 to the square plus 1/2 to the 3 plus 1/2 to the 4. And you see what's developing here. It's a geometrical series.
Yeah.
Trust me for saying that if you sum that thing in brackets, 1 plus 1/2 plus 1/2, etc., blah, blah, that sums, if it was an infinite series, sums exactly to 2.
Mm-hmm.
And so here you go. 50 times 2 is 100 per 210,000 blocks. Times 210,000 is 21 million. That's where this comes from. That is where we, and currently we are at 19 million because we've seen whatever 4-6 halvings or something so far. And that's just an explanation of where this cryptic dynamic comes from.
Mm-hmm.
So what are the economics of this? And I find this quite intriguing, actually, because you need to remember that the proof of work is generated by banks and banks of parallel processors and parallel computers, which do just that one thing. And the electricity which is consumed in that is enormous. So enormous, indeed, that currently the electricity cost associated with the mining of 1 Bitcoin is $10,000. But the price of a Bitcoin currently is $20,000. Currently, the block award is 6.25 Bitcoins. So you get something like 6 times 20,000 if you get the proof of work. So you get 120,000, but you're expensing $30,000 in the process. So you get $90,000 and this is cool. But obviously, say 2 years ago, electricity costs were less than a half of what they're now. Bitcoin was worth 40,000. So I'm not going to go through the arithmetic here, but you can see that the margins were much higher. You got a higher you got a higher block award, and the associated mining costs were much lower. So now what is going to happen next year, electricity costs are now falling, sure, but they're not falling by a factor of 2. So the block award halves, but the electricity costs are not going to halve. In other words, the margins are not going to increase. If your margin is not going to increase, a lot of players in the Bitcoin mining industry are just not going to bother because they can't actually make it work economically. So the marginal Bitcoin miner disappears. They don't go bankrupt as such because they're not companies in that sense, but they're just stopping, they're ceasing their activity. And so they have disappeared. Because they have disappeared, the field of miners is now less. So there is a bigger chance for those who are still active to actually hit the code in the awarded block time, because you only have 10 minutes to do this. If you don't get this done in 10 minutes, if you don't hit the right code, then you can start again. And so there is a complicated economical and behavioral interplay at work. And so that is, I think, why Bitcoin tends to increase at the halving event. This is not something which is intuitively obvious, because at the halving event, the supply of Bitcoin increases. So if the supply increases, the price should go down, not up. But I think it's this particular interplay that there is some marginal, the community of mining players who find it economically lucrative to be in the game reduces commensurately the chances for you to actually make money within the block time increases, and so therefore you get increased activity, increased earnings, and that is why that tends to happen. If you do look at the share price development of, not share price, at the valuation of Bitcoin, it's not exactly obvious that this happens, by the way, at the halving event every 4 years. There's some evidence, but it's not that clear. But anyway, so I just wanted to present the sort of technical and economic dynamics behind the mining, because I think it's actually quite an interesting process. It's there's a lot more behind it than meets the eye, I think.
Absolutely. I mean, I think that's a really good explanation. And I would say to anyone who is listening to this or watching this, I would say if you're still a bit kind of doubtful on this or not quite done this, I'd listen to what Ralph has said again, right? Because, like rewind and go back again, because it really is it makes a lot of sense. And I think that once you understand this, I think that this will be very useful.
Cool.
In terms, so it is very good. Right, okay, so let's go on to the third topic. So we are going to, I'll start off by talking about one of the how I thought about this kind of fusion question and how it's going to change the world. So it started off with, as usual, loads of news about artificial intelligence this week, and it was particularly pertinent because we saw that Nvidia, whose chips power the computers that are responsible for powering up AI. The Nvidia reached a market capitalization of $1 trillion this week, and that is largely
Mm.
because of the recent surge in its share price, because it is so closely associated with the fortunes of AI. It's so interesting because Nvidia, if you'd have asked anyone, say a year or two ago, what would you think of Nvidia, everyone would say, well, gaming chips. But
Mm.
now it's actually changed, or it is changing now, um, to be an AI kind of focused company, or that's how it's certainly perceived. Anyway, the point is that all this AI stuff, it requires lots of computing power. The computing power is in data centers. And data centers, each data center can sometimes take around the same, sort of suck up the same amount of electricity as 50,000 homes.
Mhm.
Now, if we assume that we are on relatively the beginning of the journey of AI, um, my argument is that there are going to have to be more data centers. And if there are more data centers, they're going to need more electricity. And how are we going to cope with that? Now, I, putting it together with other recent themes where we've talked about Helion Energy signing a deal with Microsoft, or the other way around, whatever, where they were going to be supplying Microsoft with a certain amount of fusion generated electricity by 2028. Now, this is, and I remember we said this at the time, this is absolutely massive. This is a development which we thought was going to be a decade or decades away, but it really seems that things have heated up quite significantly. Now, I would suggest, I would suggest that this is, this expansion is going to need obviously a lot of electricity, and I thought fusion could be a good way of powering all this stuff. And although it still seems like it's years away, I just wondered what the effect would be if fusion really was commercially viable within a relative, 5 years or 10 years or something like that. And I really thought that it would upset the balance of the world.
Mm.
And I thought, because I think when these kinds of things, when I think about these kinds of things, I sort of try and start with the broad kind of thought process at the top, and then try and come down um, to individual industries and companies. And as a starter, I would have thought that this is going to mean that countries that are net oil importers are going to suddenly become more powerful overnight, because they will not rely so much on getting oil. Um, Conversely, the members of OPEC will suffer considerably, um, and there will be consequences to that. So, well, starting off with that, I guess, Ralph,
Mhm.
what are your thoughts on it?
Yeah, it's an immensely rich subject, this, and very difficult, of course, to properly analyze what might happen, because as such, it's so involved. There's so many aspects of this. Um, Let me perhaps start with just outlining the future need of electricity. And we've basically, that just follows on very nicely from what we've just talked about in the context of Bitcoin, which consumes a truckload of electricity just for the mining of the proof of work. Now, it seems to me that consumption of truckloads of electricity, that's the sort of catchphrase here, because that's going to be the hallmark of lots of industries which are currently in which are currently building, which are currently in the making. You've mentioned one obvious one, which is artificial intelligence. The current impact of artificial of AI in the sort of world which we know are LLMs, large language models like
Hmm.
GPT, and everybody has them now. There's a real race going on. Google, Facebook, TikTok, everybody has things like that in the making or has already launched them. And if you think about what that involves, it's just absolutely mind-boggling. The amount of processing power which is necessary to enable something like ChatGPT is astounding, um, because it's basically in the end something like a neural network which has got, I think, 20 billion parameters. That's like a linear equation with 20 billion parameters. And all of these parameters are fine tuned in order to get the result which you need. So it filters through the neural network. It gets you a result that is compared with what you want. And then there's something called backpropagation, where each of these things is minutely adjusted and then compared again with the result, and the error function is minimized until you get what you want. That is happening when we're using ChatGPT. That's happening when we're using Midjourney or any other of the LLMs which are currently out there. And you can imagine the immense amount of electricity which that consumes.
Mm.
And it's not just GPT, as I said, it's everybody has them now, Google, Facebook, etc. So that's one thing. Second one is actually, interestingly, fusion energy itself needs an immensely powerful backdrop or envelope of IT technology which enables it. We discussed the uh, impact or the plans of Helion in the last episode, and you just referenced them again. What they're trying to do would just not have been possible 10 years ago. So that itself will consume energy. Data centers you mentioned, um, blockchain probably as well, to the extent that they are actually going to stick with the slightly old-fashioned proof of work concept. Electric vehicles, of course, batteries. I mean, the amount of electricity which the world is going to use, I think, is going to exponentially increase. And it has to come from somewhere. And if fusion was, in fact, um, if fusion is going to exert itself as a commercially viable proposition as early as 5 years from now, that will transform the societies and the economies which are carrying this type of technology. Um, so to your point now, who are the winners and who are the losers? Yeah, you would think absolutely that net importers of oil must be winners, but there's one other thing there, isn't there? We can't just replace oil with electricity. And somewhere in some industries, this is of course going to be possible. We're going to be able to replace fossil fuels with electricity, for example, in the sector of electric vehicles. But some industries are going to rely on oil. So it's not just who is the net importer of oil, it's also which industries can be switched from oil to electricity in a time where electricity production is abundant and where we can basically get this from fusion. Um, but so these are sort of my initial thoughts on
Mm.
this.
Yeah, I mean, it would be so transformational. I mean, I was just thinking there, another massive, you, future user of electricity is going to be everyone switching to electric vehicles.
Oh, well,
Um,
yeah, sure,
and so
exactly.
all of this stuff. I mean, in some ways, oh, sorry, in many ways, really. I guess the Ukraine war has really woken everyone up and made everyone realise that they need to be more energy independent.
Mm,
And as a sort of extension of that, that has meant that, there's been more effort, more money poured into different, alternative sources of energy. And therefore, that's probably one of the reasons why you've got Helion Energy is confident enough to sign a contract with, to supply Microsoft.
Mhm.
So, yeah, I mean, I just think that this is a huge a huge theme.
Well,
And
sorry, sure.
no. I mean, it's a huge theme, and I think it is something that we all need to start thinking about, and how it's going to change the world, what the world is going to look like in that. I mean, we were saying that potentially in the Middle East, this could be very destabilizing.
Mhm.
And then you could have China coming along and trying to galvanize the region, etc. But I mean, what other what other thoughts do you have?
Well, absolutely. First of all, of course, what we need to see is that the fusion technology is going to be available at scale. Helion, we discussed it. I'm massively excited about it. It's very interesting that there's a company now stepping up to the plate and actually saying, okay, in 5 years' time, we are guaranteeing that we are going to produce fusion-based electricity. And if we are not, then we're going to pay you guys a fine. You guys being Microsoft.
Hmm.
So that is an actionable, tangible promise, which is different from all the other scientific proof of concept breakthroughs which we've seen, which are important in themselves. But this is more tangible. So it might happen, but if it were to happen in 2028, it is still not at scale. But if we get to a scale event that, let's say, 50%, inventing something, of the UK demand for electricity is being produced through fusion, that's the sort of order of magnitude which I think will change the political balance of power in the world. Because the providers of oil, I mean, the OPEC countries, the Middle East countries, they won't disappear. They will still be important because, as I said before, you can't just switch all oil producing or oil consuming industries into electricity. But of course, the influence will wane and will become less important. Now, if you look at the OPEC economies, let's say maybe 30, 40 years ago, the diversification of their economy was almost non-existent. I think it's about like 70 to 80% of total GDP was generated from oil production. Now that has improved, but it's still a chunk, still 40 to 50% or so. So if these economies are going to have to accept less export of oil, the overall GDP of these economies will suffer materially. As it suffers, the ruling classes are going to have a lot less economic wealth and commensurately a lot less political influence or stranglehold on their societies. So I would not be surprised to see at that time some form of civil unrest, revolutions happening in these countries. Let's remember, something like the Arab Spring was fueled by the price of bread going up. Now, it hasn't resulted in large-scale revolutions, but it has resulted in the replacement of some regimes in the region. So that's something which we are going to see, I believe. If I spin this further, at that moment, the Middle Eastern economies, the Middle Eastern countries, will have lost some of their significance. And they will therefore have to start looking for potent allies. Who is going to be the one clear winner of this? It's China. Because China is also going to be able to develop fusion technology, is indeed already one of the leading economies doing this. So they will have fusion technology. And as we know, China is currently emancipating itself, is moving towards establishing itself as the leader of the autocratic world. So I'm thinking that if, just on the broad brushstrokes of this, if we get to scale events of fusion produce electricity in most of the free world countries, and certainly in China, then I would not be surprised to see the current evolution towards a two-block world divided between almost a digital world divided between two blocks, the autocratic world led by China and the free world led by the US and one would think increasingly important European Union.
Yeah, I mean, like I say, tremendous subject. It's something that I did wonder. It came up in conversation last night, and it just made me think. What would happen? And it, the impact would be huge. Is the conclusion of that? But I do think, hopefully, listeners watch, people who are watching this video, hopefully that gives you some food for thought, and maybe try and think yourself of what could happen, what would be the effect on OPEC, et cetera, and what would happen again in a world where, God, this sounds like some sort of movie trailer. In a world with cheap electricity, then something happens. But you just think, what would actually happen if electricity cost next to nothing? How would our lives change? It would be pretty amazing. So yeah. Anyway, I think we'll end on that particular note. But as always, thank you very much indeed, Ralph, for your insight and brilliant explanations.
Well,
So
if they are, I don't know. I'm doing my
no,
best.
no, it's good. It's all good, and I think really you need to explain your t-shirt essentially. So anyone who's not actually watching this as a video, you have a skull and crossbones, and on above the skull and crossbones it says no falls, and then underneath the skull and crossbones it says no balls. So please, an explanation.
Might it be football teams related to balls? I don't
Maybe.
quite know.
I don't know.
No, this is a t-shirt which I bought in Vale when I was downhill biking.
God,
And
you're a nutter. You need to be pretty insane to do downhill biking.
It's awesome. It's the best thing. It's the best thing after skiing, I tell you. Absolutely insane. The adrenaline is pumping. It's absolutely brilliant. And so obviously the t-shirt would suggest that if one is not sufficiently vigorous in one's attempts to hurt oneself, then one is a wimp.
Right, okay.
Now, I just like the idea, but then, of course, having hurt my knee in my skiing accident like a year ago, I'm less inclined to follow my own advice. But it's cool, huh?
Yeah,
it's
very nice. It's all very good.
Yeah.
It's all good. It's all good.
No,
Skull
but
and
I have to
crossbones.
say, anybody who's not been done, who's never done downhill biking, it's brilliant. Go out, find a bike park, and just let.
Don't you need armor and stuff like that? Don't you?
Yeah, it's best.
You don't want to be going down in there in your skimpy lycra. And
at my age, you don't. But if you actually, I often go to the Whistler Bike Park.
Yeah.
And it's a young demography which does it. I mean, when I enter the bike park, the average age goes down by like a factor of 20 or something.
Yeah.
But I mean, most people are indeed 16 to 20, 25 years old or whatever.
Yeah.
And these guys, we all have integral helmets on,
Yeah, you
but
do have
that's
to.
it. I mean, these guys, that's all they have.
Yeah.
And I'm there with this like arm pads and
Yeah, yeah, yeah.
body armor and all sorts
Yeah,
of things.
yeah. Because I mean, in the days where I used to do a lot of road biking and triathlon and all that sort of stuff, there's this particular village near here called Pease Lake. I think it's called Pease Lake because there's a difference. There's a village
Yeah,
near here called
I know it.
Pease Marsh, and there's another one called Pease Lake, and I think it's Pease Lake. And
It's also like
basically,
Lord of the Rings, by the way.
yeah, exactly. Anyway, there's this kind of centre, and there's like a bus stop and a little shop. The little shop does an absolutely massive trade in selling to bikers. So everyone congregates at this bus stop and they go in, they buy coffee, they do very good pork pies, cheese straws, various other things. And yeah, I mean it's just amazing, and you see all the road bikers, tall, skinny, skimpy lycra. You see the mountain bikers with their kind of baggier clothes and
Oh, I see.
bit muddier,
Yeah.
and then you see the real nutters. The downhillers with their armor and stuff on. It's just incredible. I didn't even know it existed, and I saw what they wore, and I thought, God, you are welcome to that.
It's
I mean,
awesome. You have to try it. It's absolutely
yeah,
brilliant. The runs are specially shaped.
yeah,
It's shredding. It's just sending it.
yeah.
It's radical.
Oh,
It's
yeah, yeah.
brilliant. I love it.
No, I'm not convinced. But anyway,
Okay.
yeah. But anyway, but thank you very much indeed.
Absolutely.
Yeah.
My pleasure.
So have a lovely weekend, and I hope everyone, listeners, viewers, etc., have lovely weekends or whatever it is. Have fun, whatever you're doing, and we'll be back again next week.
Absolutely.
Many
Thanks,
thanks.
guys, for listening. Thank you.
Right. Bye.